Foschini consists of 14 trading brands and sells fashion, jewellery, accessories, cosmetics, cell phones, homewares and more, if there is more. It trades on a price to earnings ratio of 19.8, dividend yield of just over 3%, market cap here 38.6 billion rand. Foschini's, and Byron, let's get you to kick off on with your thoughts.
Yes, I mean, they've also got a great mix. Just like Mr. Price, they've got good exposure. I think they've got at home, they've got sports scene, total sports. I really like that sports theme going forward.
It sounds like a Vestac thing because Paul loves his sports gear as well.
Well, people are becoming more health conscious. It's no secret. Buying more sports apparel, and even in terms of fashion, the way fashions are going, people are wearing more sports apparel just to go to the mall or to, Tasha's for lunch. So I think that theme is great going forward. Good mix. Also got nice exposure to the beauty element, which I think is going to be growing, especially in a developing market. They recently made quite a big acquisition for the size of their business in the UK. I forget the name of that business.
Plus 8 or something like that? Phase 8.
Phase 8.
Phase 8.
Well done.
Yes.
And I think that's pretty well timed. A lot of South African businesses are trying to gain exposure into developed markets, and just have a bit of a rand hedge and try and capture the growth we're seeing in economies like the UK.
Chris, a very positive overview from Byron. Do you endorse that view?
Very much so, and the nature of their business has changed quite markedly in the past couple of years. This used to be predominantly a credit retailer, and of course they changed with the RCS, the company that they established, and they sold that off now. But even within that, the cash credit balance has now swung much more in favour of cash, so that's changed. They've got the balance of the merchandise right. I mean, this really has come through with a vengeance. And although it's had a huge rise recently in the past 2 or 3 months, this has, I think, been one of the favourites in the past 2 or 3 months. It's still sitting on a relatively low PE of 19.8. Compared with the rest of the sector, it's still quite cheap.
So there could be an entry point in Foschini if you're wanting exposure to the broader clothing retailers.
And I think also, what Chris alludes to about less reliance on credit, when that phase 8 numbers start filtering into their earnings, we're going to see less than 50% of sales coming from credit. So it's going to shift over to that 50-50 and become more a cash retailer. So I really like what they're doing. I do like the international diversification, and I like the spread.
Chris, hot or not?
Hot.
Hot or not?